Gorsh! Well, if it isn't Walmart taking off to the moon, baby. You want to know what this company's doing? Kind of crazy. Up 3.8% at this point now in after hours trading, or I guess in this case pre-market. They just reported earnings, as you know. If you watched the earnings video, you better have watched it. Just reported these earnings here. Actually, in the AM, right around 6 a.m. So we're recording this pretty quick, right? You can see really when that happened. You see this big spike here at 6 a.m. Reported earnings, and since then things have been very positive. Obviously, we're talking about a 4% gain so far. Now again, we're talking about a stock that's already had really a stellar year. Again, we look back. Let's just pull this chart to 1 year, and it's been a pretty good year, no doubt. I mean, we're talking about from 159 to where it was about 160 something in the span of a year. It's been good for Walmart. Usually a pretty boring stock in terms of performance, but again, I talked about it in the earnings video. How does this company that's already had such a great year, how does it continue to do well? Well, it's tough when the estimates are so high. And you know what this big old gain up here leads me to believe? That I highlighted way too much. Why is it pulling it? Leads me to believe this was a stellar earnings, and I'm not shocked. I predicted a pretty good earnings to come out of them, and for many reasons. We saw obviously the writing on the wall with Amazon in terms of e-commerce, and just some other factors here too that I was pretty bullish on these earnings from Walmart. So let's get into them and get crack-a-lackin', see what these numbers actually are, and hey, I'm pretty excited. I'm a man with some skin in the game. Yeah, I'll leave it at that. That's all I'm going to say. I don't know. There could have been a joke to be made there, and I just really didn't want to do it because it's just not right. It's just not right to me. So here's what we have in terms of the earnings that came in: $1.80 versus $1.65. Expected already, what they were expected to actually decline this line year over year, and here they go beating it and actually growing year over year, which is good. And then from a revenue perspective, now this one is an absolute just a beauty of a line. Holy crap. 173.39 billion versus an expected 170.71. Now, obviously the estimates when I pulled up for on Yahoo Finance were a little bit wrong, there's no doubt. But again, I told you, and I expected this to be a beat of a couple $1 billion. This was a beat of $2.5 billion, nearly $3 billion, so even better than I had expected. So pretty darn nice. Now, they will mention this in the 3-month period. Walmart's net income fell to $5.40. What am I talking about? $5.49 billion compared to $6.28 billion here of a year ago. So on a net standpoint, actually did decrease there in terms of net income, but revenue increased from $164.05 billion. So again, we're talking about a nearly $9.5 billion increase in revenue. That's absolutely insane. And again, when you get to this high of a percentage, that really only equates to like 600%. But to grow to mid to high single digit when you're already generating this much revenue is absolutely insane. Now, and again, what I told you is for a stock like this that's already been so high up, the expectations are so high, the only way that they can move forward is really the trifecta, and here it looks like they hit the trifecta. So for the next quarter here, it expects net sales to rise 4 to 5% and adjusted earnings of 148 to 156 on a pre-stock split basis. So again, the split's going to be taking place next month. So this is just, assuming this EPS is going to be assuming that hasn't taken place, basically. So they obviously don't want to calculate for that just yet. Then for the fiscal year of 2025, they're expecting 3 to 4% growth and EPS of 670 to 712 on a pre-split basis. That's obviously pretty darn massive. So really impressed by this line, no doubt. 3 to 4% growth when you this year put up I think it's somewhere like $500 billion in revenue. We'll see the full year line here because this was Q4 for them. We'll take a look. And what else do we see on top of that? First off, I'm kind of impressed because there was another bit of shocking news that's kind of been rumored before. And here it is. Walmart to buy Vizio for $2.3 billion. And what's the focus there? Well, obviously it's going to be, as it mentions here, to grow the ad business, because that's a whole other stream of revenue that they really haven't capitalized on as much as they could have. And obviously Vizio, kind of a mainstay in Walmart's as well. So that's definitely interesting. And they do mention this here, obviously, as a high margin business, Vizio, no doubt. Well, the ad business is. Now, this does strike some curiosities, and in my point, I'm kind of, that's the picture they took. There's a dang old disinfectant wipe on the top of the Vizio 43-inch right here. What's that about? What even's going on right there, man? You could have taken a better picture, and you took the picture of the 43-inch next to this disgusting TCL. Come on, buddy. Let's get a better person for these pictures. Who did it? Justin Sullivan. Yeah, you're pretty bad at taking pictures, Justin. I'll just tell you that. And it's a lame name, not a great name. Main thing here, obviously, we'll mention the price, $2.3 billion. Now, you're curious, is that a premium to the stock? Well, it is a premium to the stock. That being said, the stock's market cap is about $1.88 billion. So to buy them really at $2.3 billion, and that's prior to the jump today, it's really not that bad of a premium there, about a $500 million premium. It's really just chump change when it comes to Walmart. Again, in one quarter, they, had $5 billion of net income. So, absolutely chump change. Now, the question becomes, is this something that could potentially get antitrust block? It's such a small purchase, I don't think it should. But again, we saw that Amazon wasn't even allowed to buy a robot vacuum cleaner. So who knows if Walmart can buy a TV maker that's not nearly the biggest one. I don't know. I don't think there should be an issue, but hey, just worth taking a look at there. And on top of that, one other question there really I had was going to be, what I know Vizio's got to deal with Roku. How does this impact that? Obviously, Roku's going to be just out of there. I mean, there's no doubt. I don't think Vizio TVs after this purchase will be built in with Roku, or at least once their deal runs out. I don't know. We'll have to see what that looks like. So, very curious. Let's go ahead and first we rate the investor relations page, as we always do. Now, Wally World here's investor relations page, pretty decent. We got this. We got a lot of actually good. You know what? The sneeze is coming, folks. Can I use the tap to mute? Let's do it. Wait. It went away, and it hurts. It hurts when it goes away. I'd rather just sneeze. I was about to use the tap to mute feature on the new crispy microphone. So what I'm seeing from this investor relations page, it's kind of juicy, okay? It's kind of juicy. I'm pretty happy with this. We got this little section for stock info. Gives us a pretty good chart. Gives us the volume, obviously, as a lot of these do. Some other pertinent information. You can get a historical stock quote, which I like that. And an investment calculator. So again, let's just hypothetically, here you go. We're comparing 10,000 in Walmart compared to the S&P 500, and well, what a shocker. They're basically the exact freaking same. That's how Walmart's been doing it. Look at that ending investment. Walmart's ahead by about $300. So, but hey, that's pretty nice. So, yeah, compound annual growth rate about 12.89. Holy smokes. Look at Walmart go. They're just consistent. They do what they do. Anyways, I like the investor relations page quite a bit. It's not the most flashy. Oh, gosh, I didn't mean to click that. But it really gets the job done. There's a lot of great features. And on today's episode, I'm going to be rating Walmart's investor relations page an 8.3. That's a big score. It's a big score. Hard to beat. It's hard to beat. So let's get into this earnings report and see kind of what we have going on here. I went ahead and pulled up the press release. So we can see some data here. So strong revenue growth again. I said 6%. I guess it was 5.7%. Sorry, guys. My math, the quick maths wasn't good enough, and I apologize. I'll work on doing better. Operating income growing faster at 30.4%, and adjusted operating income at 13.2%. This is the big line here. That really was this is what I was expecting as far as the quarter went. E-commerce grew 23% globally, which is crazy because that means it surpassed 100 billion. That means they grew by $20 billion in e-commerce, at least $20 billion. That's crazy. That's crazy. And it's not a shocker, obviously, right? We see things like Walmart Plus and things of that nature driving people to online sales. And just in general, the market, just the consumers buying stuff online. That's what they do. So fourth quarter highlights, we saw that 5.7% growth there. Pretty nice. Doug McMillon here is pretty excited about the e-commerce sales, which I get why. That's why people would buy the stock. It's another really great avenue for growth. You not only get the ad business online, but also just, you're just getting more customers. It's easier to get customers that way. Global advertising business did grow 33%, including 22% of Walmart Connect in the U.S., so pretty massive there. So global ad business growing for them, and that's obviously a small piece of it right now, and it could continue to be a bigger piece here as if this Vizio Holdings purchase does continue. Now for the full year, they grew up 6%, obviously pretty heavily impacted here by inflation. Inflation definitely helped them with the fact that the prices kept going up. Mr. Joe Biden himself was raising. I raised the prices. That's what he said, and he raised the prices. And Walmart benefited from it. So hey, if you're an investor in Walmart, you don't like it when you're buying the groceries, but you kind of like it with how the stock's been performing, right? So there's plus and minuses there. Global advertising business on the year reached $3.4 billion. Again, I talk about the fact that that's such a minor piece of the business. It's going to become a much larger piece. And we're talking about this Vizio acquisition, which I'm excited about. I could see, within the year, this line easily doubling with the acquisition of Vizio, and I think it's obviously going to be a higher expectation than that. The goal is if you're buying the company for $2 billion, you're going to hope to get more than that in terms of your growth. So we'll see what that equates to. So yeah, GAAP EPS of that $5.74, which just puts into perspective here when we look at this expectation, which we'll get into expectations too, of 670 to 712 is pretty crazy because we're expected to grow that, by nearly $1 a share on a pre-split basis, obviously. So we look at the charts and these charts here, and they look good. These little graphies, 39 basis point growth, gross profit rate. Glad I said that correct. I was afraid I wouldn't. EPS. Now, on a quarterly perspective, I was actually incorrect there. It looks like there was a little bit of a decline there. It was the full year. On an adjusted standpoint, there was the growth. Now, from an actual GAAP perspective, there was a little bit of decline. Now, on the full year, though, that's kind of what's crazy. There was a 34% growth and a 5% on an adjusted basis. So that's where you see a massive line there. Pretty crazy. I know we'll talk about that. We'll get into the balance sheet here really quickly. No doubt we're going to do it. So here's something we like to look at. Walmart U.S. transactions for the quarter up 4.3% is pretty crazy. Yeah, that's wild to me. I don't know. And the average ticket did decrease just slightly, but again, when you increase transactions 4.3%, I mean that's an astounding number in my perspective. So, and that's Walmart U.S. It's 117 billion. That's where you see a lot of the money's coming from. But then we get into Walmart International, about $32.4 billion there from Walmart International, showing about a 17% change on the quarter. So that actually showed a much bigger change. And again, it's easier to make that change because Walmart US grew $4 billion, Walmart International grew $4.8 billion. So again, it just looks like a higher percentage. Oh, I guess I could have just, that line was the change. I didn't really need to calculate it in my head, but I did. I'm built a little bit different. Now, Sam's Club, definitely a segment I'm pretty excited about there, is they're just going to show continuous growth. It's a business model that's definitely doing pretty well. Now, only a 2% growth here, $400 million growth in terms of revenue. So not that crazy, not that incredible. Transactions up 3.6%. It's what you want to see. And from a full year perspective, we saw 2.2% growth there, $1.8 billion. Nothing crazy, but it's a good year for them, no doubt. Advertising is up 11%, but again, you don't see a lot of ad business with Sam's Club really. So, but here's where they talk about growth in e-commerce and curbside to 17%. Growth, I should say. Here's just a picture. I put your picture away. This lady's got a bad hairdo. Look, I don't want to be rude. And this guy, look at the slick back, man. What is going on here with these haircuts, man? Is that the same lady? That's a different lady. Guidance, we just talked about there too, so pretty excited about that guidance. It looks pretty good. Let's get into some of these charts here, and you want to know what we're going to look at is the balance sheet. You already know I'm looking at the balance sheet. I love a juicy balance sheet. Hopefully that noise picked up well on the mic. I know it did. Total assets, and this is a full year comparison, which I like from Walmart. Thank you for giving me a full year comparison. I like looking at this. Just a 3-month comparison just ain't enough sometimes, guys. It's just not. $252.3 billion versus $243.1 billion. Hey, pretty good there. $9 billion growth. Now we look at the liabilities. Total long-term debt. Look at this. Look at that. So total current liabilities 92.4. And then we get into actual shareholder equity, and it's Walmart. I don't know what you want me to say here, man. From an equity perspective, this puts total shareholder equity right at $83.8 billion. Now, again, it's not an actually phenomenal balance sheet when you think about it. We're talking about 252 in total assets. And then when liabilities are taken into effect, that's about $130 billion. It's not bad at all. I'll tell you that right now. It's definitely not a bad report or a bad balance sheet. But again, that compares to really an equity of only $76 billion just a year ago, so even better than what it was. And retailers are going to see this. Retailers aren't going to have the balance sheets that tech companies have. They don't print money like tech companies do because, again, the high margin businesses these tech companies run, like advertising, Walmart's not really privy to just yet. They're not in there yet, but they're getting there. So, hey, what do I think about Walmart? Let's pull up our handy dandy Thinkorswim. Now we're using the web. Don't get it twisted, folks. Oh, look, there's my total position. Look, I got some skin in the game here. $11,000 of skin in the game, apparently. So, what do we think of Walmart? Well, hey, pretty excited. We look at some of the details up here, which we like. Again, PE ratio 28. With that estimate, bringing that forward PE ratio about 25. And I mentioned it too, it's trading historically about where it does in terms of valuation. I think there's plenty of room for growth, especially when we talk about advertising growth. And I just think that there is plenty of room for this company to still grow. And I think, I mean, come on now. We know what it's going to do at the end of the day. It's going to almost exactly match the S&P 500. It's what it does. That's what the stock's meant to do, and then obviously pay you a nice little divvy in the meantime. So that's what I got it for. It's what we call a rock to the portfolio, but I think there's actually plenty of growth to be had with the company. So that's what I got for you, and I hope you have a great one. Bye.